The Fed just dropped $25 billion into the market today, and you're still expecting this market to go nowhere and down? My friends, if you think that we're going to go terribly much lower, you're incorrect. Doesn't mean we can't go lower, but what I'm suggesting to you is that in a short moment, we shall see what will unfold. And in this video, I have something that I have just spotted on the charts that perhaps you're going to want to stay tuned to wait and see. In the meantime, welcome back to the Crypto Bliss community, and thank you for being here with me. If you are watching this and are part of that 80% of you that are not yet subscribed, please go ahead and obliterate that subscribe button. And if you're enjoying the content, you're welcome to leave a thumbs up. So the Fed just injected $26 billion into the economy. Here we go. You are at one of the most precedent times. And on the chart, I'm going to give you something that you're going to get excited about. So stick with me. What you need to know and what you need to understand is that liquidity has gone from gold to silver. That transition tick has started to happen. You can see that the gold chart. So as you can see in the gold chart, liquidity ran right into gold. We had a nice little bit of a dip, and then we had this massive rally. But now at the moment, we are currently seeing a double top form on gold. And what we could expect is a potential crash somewhere back down to about $3,800 odd. And if we end up breaking that level, it could end up coming back down to about $3,400. Now, make no mistake that throughout 2025, we've actually seen gold pretty much go up from about 80% over 2025. That's a really good rally. But I think, as you can see, gold is starting to become a little bit exhausted and is now starting to turn. These are reversal candles, okay? And that's a double top. Be cautious, because those funds have started to transfer right over into silver. And yes, silver has gone up over the course of the year, but it itself has been waiting to break out, and literally only broke out on pretty much the 1st of December. From the 1st of December, we have experienced silver doing a 55% rally over the month of December. That's pretty cool, right? Now, over the course of 2025, you can see that silver has done a 200% return, my friends. So silver has actually outperformed gold over the course of 2025. And as you can see, gold liquidity goes into silver liquidity, and then from silver it goes into commodities, which broader commodities like energy, metals, materials, things like oil, etc. And once things like that start to happen, we then start to see the liquidity spill out quite quickly into digital gold, which is of course Bitcoin. And the risk on phase the risk curve expands, okay? And then the risk on phase begins when Ethereum then starts to pump, and we start to see liquidity flow from Bitcoin into Ethereum. And then from Ethereum, speculation increases, and then that starts to flow into altcoins. I have been showing you a few of those charts. If you have been part of my channel and watching my videos over the last few days, you would see charts like that in my videos. But really, gold is early cycle, which is safety. Silver is mid-cycle, which is efficiency. And then everything else starts to become late cycle, which is speculation. So you will get the most risk to reward at this point, but the likelihood is you're going to have to get in and out quite quickly. Now, as you can see, if Bitcoin does follow the silver trajectory, we could potentially top at a $400,000 Bitcoin in BTC in 2026. We're going to have a look at this on my Fibonacci levels in a short little moment, so stick with me. The best chart in Bitcoin right now is the following, okay? As you can see, downtrend, 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 and the momentum is getting bigger, as you can see. And every time then the price has a much much more interesting price explosion, right? And what we can see right now is we're at this bottom, my friends. We're starting to turn up. We just literally bounce off of it once. There's no double bottom edge on there. And right now, we actually have seen a double bottom, which means that we're about to see a catapulting explosion in the market. Doesn't mean we can't dump. You need to just understand that right now. Doesn't mean we can't still dump a little further. Okay, you've seen that on my charts. But we've watched Bitcoin go from $32 to 2 cents, from $200 to $50, from $1,200 to $200, from $20,000 to $3,000, $60,000 to $16,000, $108,000 to $75,000, $126,000 to $83,000. Do you understand the pattern? It keeps going up. Okay, and that's why your dollar cost average into Bitcoin is absolutely just what you should do, and you should have a 5 to 10 year beyond outlook, right? Now, as you can see, the US national debt clock is just continuing to pump. It's now 38.54 trillion. We must have pumped at least, even though we were going through quantitative tightening, okay, they were still printing. The US national debt still continued to grow. I do believe that the US national debt at the beginning of 2025 was approximately $36.2 trillion, which means that we've added $2.5 trillion over the course of this year. Where's that money going, right? You have to ask these questions. And so you can see now, and if you go and have a look on some of my recent videos, okay, my altcoin videos especially, you'll see that I've been talking about the US M2. The US M2 has increased ever so slightly. It was at 22.31 over the last couple of days, but we're now 22.32, meaning that there's almost been $100 billion that have come into the market over the last few days. All right, that's telling us that we are literally breaking up. Maybe we get one last liquidity crunch, grab and retest there. However, ladies and gentlemen, it just goes up. There hasn't really been a massive pullback. The strongest pullback we've had is this one. Okay, so I don't see why we're going to have a liquidity pullback right now when we should actually just be the M2 is just going up. Now let's go and have a look at Bitcoin. Bitcoin is currently, and you do know that I have previously spoken to you about this very dangerous looking bear flag, and if we were to actually follow that bear flag pattern, that could take us down to a $40,000 Bitcoin price. Now, do I think it's going to go there? No, but it doesn't matter what I think. What matters is what the chart is indicating to us. Okay, that is a very, very, very strong support zone. However, the previous all-time high should be your absolute first zone of support. And if we were to perhaps shorten the bull flag that we're experiencing and maybe look at where that ends up going, that seems to go take us to the middle of that zone at about that 60,000 level, which somewhat is what that previous all-time high on Bitcoin was, right? This zone right here. So don't rule out the downside, and understand that in the next week, by Monday, 5th of June, 1 week from there, 1 week from today, we will see a breakout and the direction of Bitcoin. Now, you can see here that we're starting to build momentum to the upside. If we had to add our volume, you can start to see that volume is starting to creep back in on the buy, right? Slowly but surely. I will show you another chart in a short moment that will give you a stronger indication. But let's have a look at Ethereum, because as you know, Ethereum is currently on a much more macro time frame, as you can see, busy building a head and shoulders pattern. Now, I believe that this is going to follow Bitcoin, okay? So we should start to see, hopefully, Ethereum then push up with Bitcoin. And when that does happen, we will then start to see an altcoin rally. Now, here is the conundrum that we are going to experience, right, is that there is a very strong horizontal on Bitcoin and on Ethereum and on altcoins pretty much now at this level, okay, which is, call it up to the 618, right? The 618 is going to become that resistance level because we've drawn the Fibonacci from the top to the bottom, okay? And that's indicating to us that Ethereum could at the very most bounce up to $4,000 odd right now, and we'd have to see what it would do there. Now, if it does that and is heavily rejected, then we're going to start to see a lower high, and that will indicate to us that we will then perhaps continue into the bear cycle, which, my friends, I don't know if we'll see Ethereum back down at this $1,200 level. I really just don't see it, or even $888. But make no mistake, if it does go there, if you've been subscribed to the Crypto Bliss community, you surely are dollar cost averaging into Bitcoin and Ethereum, right? Of course, this video is not financial advice, but when you have the US manufacturing indicator, the manufacturing indicator tells us where the business cycle's at. And the business cycle indicates to us when liquidity flows into the market. Currently, you can see that we're floating here. That means we could come down on ISM and then start to pump back up. Now, of course, we can extend these because currently you can see we're still somewhat in a band, in a range within this zone. And right now we're building up here. And usually when we build up, we tend to move to the sell zone up here. And that's when you know that the market will be done and dusted and you need to get out and take some profits and sell and get into some stable coins, all right? And do yourself a favor and ensure that you are protecting your capital. Always remember to do that. Now, as you already know, Bitcoin is on this trend line, okay? We've drawn this trend line. Let's pull it into the weekly time frame, okay? We are on this very long base trend line here. We're bottoming out on the weekly time frame. You can see that when we bottom out, we tend to have a buy that comes back in. The moment we start to see some candles that are red body and green frame, we will then be confirming that we could be heading into a buy. And then by the time the indicator comes, you know, you're ready for a rally. So you could potentially look at setting up yourself up with a trade. And that's why you're going to use my Bybit link down below. Get yourself up to $30,000 deposit bonus. Depending on how much capital you put into your account, that's what you could expect. Now, I'm going to go over some of my trades that I have entered, and yeah, some of them are in the red. Transparency is key on the Crypto Bliss community. And of course, you can see there's Ethereum pretty much hanging on the edge of a cliff right now, but I somehow have a little bit of confidence in what's about to unfold. And I do believe we could end up in a green doji candle here. And you can see here that we're creating lower highs and higher lows at this point. Means the market is absolutely compressing into the most tightest possible range. And usually when that happens, we tend to have a violent move that follows the breakout of this pattern. And if that does happen, could go up, could go down. But of course, you'll be positioned either way. Now, my personal view is we're going to go up for a little bit because we have been coming down for so long and we have been creating higher lows at the very least, which is indicative of a bull market that is potentially happening. Now, I'm going to share a few of my trades. Let's start off with Solana at the moment. You can see Solana still kind of break even. But what I have pretty much done on each of the trades, and I'm not sure why it isn't here, but I have pretty much drawn the potential box. You take your long position tool and you essentially draw where you would like your potential entry, your stop loss, and your take profits. So now I have drafted pretty much all except for Solana because there's a heavy level up there. But if you go and have a look at, let's go and have a look at XRP. We can even have a look at SUI. But pretty much what I've done is there's a downsloping trend line that is some are still looking at and some are potentially breaking towards. Now, I have pulled the take profit to just either at the body of this wick out candle or just underneath it, because what I would presume would happen with the level of resistance now at that level, we would see a breakout which would bring us mostly up to the top of the wedge pattern, okay, the falling wedge pattern, which is your breakout, which is a bullish pattern, right? And I would believe that the take profit would be somewhere around the body of those candles because of the zones. The same thing on pretty much all of my trades you can see that I've put, and some of them, like SUI as an example, are pretty decent entries with quite interesting potential take profits. Now, doesn't mean I'm not going to take profits along the way. Of course, I'll take a little bit of profits along the way. And eventually, when the market moves cleanly and nicely above my entry level, I'm going to move my stop losses to my break even or my entry zones, which will then, my friends, be indicative of free trades. Now, all of my trades become free trades, and anything that I make beyond that becomes profit, right? So it's quite simple to understand that you need to risk manage at all times. Give yourself some breathing space in the beginning, and then develop a pattern that allows you to potentially look at really doing exceptionally well in your trading scenarios. As you can see, once again, all the way up at the top, that's a 90% potential for a 10% risk. So that pretty much is an 8.83 to 1 risk to reward ratio. My friends, that's a good trade. And even if we start to see it topping out underneath those levels, take the profits, get out of the trade. Profit is better than no profit, right? And it is also better than a loss. So that's why you need to remove the emotions, analyze the charts, add your entries, and sit back and just take it easy. Trust your strategy and allow yourself to let your profits unfold right in front of your very eyes while you sleep, while you eat, while you train, while you do whatever. If you have enjoyed this content, make sure you are subscribed to the Crypto Bliss community, because one last thing I want to leave you with is we are seeing the largest AI companies by market capitalization. We can see here NVIDIA, Apple, Alphabet, Microsoft pretty much are the hardware devices, the computers, the data storage, and the rest of those companies are pretty much going to start to be software-based companies, and you're going to start to see software companies really start to increase over time in their value. We're also going to see health companies and tech companies and tech industries currently valued at 46 trillion. Where do you think the liquidity is going to flow? It's not only going to be crypto. It's going to be crypto. It's going to be tech. It's going to be software. It's going to be AI. You need to understand energy. Okay. You need to understand where the liquidity is about to flow into, because there's going to be absolutely massive amounts of liquidity coming into the market. If you have enjoyed this video, then make sure to subscribe to the Crypto Bliss community if you haven't yet already. And if you're still watching this, then make sure to obliterate the like button for me on the channel. Thank you for being here with me once again. I truly appreciate it, and we'll see you on the next one.